The other thing I wanted to talk about is what about the inheritance tax? So I know that that plays an effect as well too. What is that? What are some of the proposed changes that are potentially going to happen, and what can somebody do to kind of plan ahead in that department?
Yeah, so another big change that they're looking at is changes to inheritance taxes. And so normally what happens is when someone passes away, if their estate, so if all of the assets that that person owns are above a certain dollar threshold, the estate pays tax on that before it gets passed on to the heirs. So if I were to die, if I accumulated real estate, stocks, if I own a business, collectibles, artwork, whatever it happens to be, and that is all worth over a certain dollar amount, my estate's going to pay tax. Right now, that amount for the estate tax is $11.7 million per person. So if I were to die today with $11 million of assets, my heirs can inherit it with no, I'm not going to have to pay any estate tax. They're going to just inherit it, no big deal. And that $11.7 million is per person. So for a couple, you're looking at over $23 million. That limit is set to sunset back to $5 million per person in 2025. So we know we're getting a change there no matter what.
Per person.
Per person, right. So yeah, so a married couple would be $10 million, and then there's some inflation adjustments that they would need to do to that too. So let's say that I have assets now that are worth $10 million and I'm single, I'm not married. I die today, no big deal. If I die in 2026, my estate is going to have to pay inheritance tax on $5 million worth of assets. I get $5 million free, and then they pay tax on another $5 million. So the first change that's potentially out there is lowering that threshold to potentially $3.5 million, maybe even $1 million. I mean, when I started my career in accounting, that limit was less than $1 million that you could pass on tax-free. So we know we're going to $5 million in 2025. Like I said, the proposals out there are to get it down to less than that sooner than 2025. The other curveball that could be in here too is right now the inheritance tax is a flat 40% tax rate. There's talk about increasing the tax rates on that to 45%. And there's even a proposal for a tiered structure that gets up to a 65% inheritance tax on estates over $1 billion. So we hope we all have that problem one day. But I mean, that's another way that they're looking to increase the taxes. So that's one piece of it, is the actual tax that my estate would have to pay. The other side of that, of the equation when it comes to inheritance tax, is what's called step up. So that's when, that's the other piece of it. So like I said, if I die today, and I'll just use $5 million because that'll just be an easy number to go with, and that's all held in an apartment building that I happen to own. That's my only asset. Well, I bought that asset 20 years ago for $1 million, and it's appreciated in value now to $5 million. So if I were to pass away and pass that apartment building on to my heirs, they would inherit what's called a step-up basis. So their basis in that property would be $5 million, the fair market value when I died. And that theoretically means that they could turn around the next day, sell that property for $5 million and not pay any federal or state taxes on that. Well, there's a proposal now with the changes to inheritance tax to eliminate that step-up in value. So my heirs would inherit that property at my basis. And so if they were to turn around and sell it the next day, they would pay tax on the gain on that property. So it's kind of a double whammy where you could be hit with, I mean, now we're talking, let's say we have a $5 million inheritance limit and that building's worth $10 million. Well, my estate's going to pay 40% tax on a portion of that value increase as an inheritance tax. And then if my children wanted to sell that property, they're going to have to pay capital gains tax on that again. So it's a double whammy way to raise taxes. This elimination of the step up in value has been proposed before. It's been struck down because it's very complex to try and track that, especially in a multi-generational situation where it passes on. say it went from me to my kids and then to their kids, tracking that basis over potentially decades would be difficult. But then again, I mean, I think it's just hard to see the same asset being taxed twice. So who knows what's going to happen there? But it could be some combination of a lower limit on estate tax coupled with this elimination of the step up, and that's really going to impact people who inherit property. I mean, a lot of times people will invest in real estate and they'll never hit those magic limits of paying estate tax, but they want to pass these assets on to their children without a huge tax burden. And I mean, that could potentially completely disappear if we don't get a step up, especially with the potential elimination of 1031 exchanges. I mean, a good tax strategy and a long-term tax strategy is buy real estate, do a 1031 exchange it into another property, defer the gain. Take that property, buy another 1 or 2 pieces of property, defer that gain. I keep deferring gains until I die. If I'm less than that estate tax threshold, my heirs inherit all that with no tax implications. That could all go away now. So we could see a lot of older real estate investors have their estate plans getting, let's say, throw a curveball at their estate plans. And what they wanted to do and what they wanted to pass on to their children might not be what was originally in the works when it all started.
So if this goes through, in other words, probably the best advice that we can give the viewers is to be in communication with your attorney, with your estate planning attorney, because it may make sense to maybe